We are live. NASDAQ falling apart. What does it mean for Bitcoin? Can Bitcoin come back or bounce back if you have a 10% wipeout in NASDAQ? Now you're like, wait a minute, a 10% wipeout in NASDAQ, that seems like too much. Well, last night, the Korean stock index, which is very heavy on semiconductors and AI FOMO, fell apart 10% as this whole, I call it the SpaceX trade, comes unglued. What are the implications of yesterday's 15% down move in SpaceX? Is it over in NASDAQ? How much have people in legacy borrowed against stocks? Will stock trading on crypto rails enhance any down move? Crypto people can get highly levered using, stock perps. It's been very popular on the way up. We'll see if it's popular on the way down. Bitcoin, which got hammered after hitting the 21-day moving average. The question is, can Bitcoin not make a new low if NASDAQ gets really hurt? And if Bitcoin does make a new low, how fast can Bitcoin and crypto potentially come back? We'll look at various correction levels in NASDAQ and tie that into Bitcoin. We're also going to talk about the Fed, right? Does this bring in the Fed if you have this giant bubble bursting? Now, you're not going to have the Fed today, but we will look at things that are going on in legacy. Layoffs, defaults, total insanity in terms of general market participation, meaning the general public just FOMOing in and panicking on the upside. And now they could turn around and panic on the downside. What's that going to mean for crypto? I don't know. Let's start with this. NASDAQ is down 3% as of this stream pre-open. If Bitcoin is also down 3%, I know that's a lot, but to me, that's almost a win. It's a win for crypto because if NASDAQ is down 3%, Bitcoin should be down 10. Now, knock on wood, that can always happen later in Bitcoin or in crypto in general. But a few reminders from yesterday's stream. There is a monetary crisis brewing in Japan. Like, I'm not surprised that this decline in the equity market started in Asia, even though it was the South Korean index, not the Japanese index. You have major issues over there that is going to require Fed printing. Now, that's not today's headline, but it's there. You've also got a situation where for the first time in a very long time, you have defaults on loan products or private credit. In other words, after 2008, systems were put in place to prevent another bond market debacle that hurt the financial system. Well, guess what? Last night or 2 nights ago, you had one of these defaults where something in private credit, a packaged loan security from Bain Capital, they defaulted and that security fell apart. So it's not just NASDAQ that's crazy. This could be a confluence of stuff going on in TradFi itself. Now, of course, yesterday could have been a really short show because if you go to Bitcoin TA, right? I mean, Bitcoin just simply failed at the 21-day moving average and this Lux Algo support point, right? The 21-day moving average is the green line. The Lux Algo, resistance zone is in the pink. And then boom, down goes Bitcoin, right? So in many ways, in Bitcoin, it's unfortunately almost too easy. But there are other things to note about today's weirdness that at least give me somewhat hopeful feelings about Bitcoin, even if there is an attack of the lows. First of all, bond markets are not rallying on the stock market decline. Normally, when you have a 3% pre-open down move in NASDAQ, bonds will be bid. They're not. Safe haven instruments like gold and silver are getting monkey hammered. Why? Because this is a P&L destruction environment, meaning legacy institutions that have got stocks, bonds, metals, and even crypto are seeing the volatility in NASDAQ, and they are just pushing the button and selling. Now, speaking of pushing the button and selling, the what I would call the insider selling is even worse than I thought it was. So yesterday we covered the fact that SpaceX dumped stock on everybody to raise $75 billion. Thank you very much. SpaceX was then going to the bond market to get more money. So was NVIDIA. Then, in what I think is a shocking move, a company that is not associated with the tech story, the Walton family from Walmart unloaded a bunch of stock yesterday. So the general public has walked itself right into a wall of smart money selling in stocks. And I'm showing this morning that there is $1.4 trillion in margin debt in stocks. So not only are they FOMOing in to stocks, but they're then turning around and borrowing money against it, either to use for their everyday life or to buy even more stocks. Margin debt in equities is up 53% year over year to an all-time record. And I'm sure you can guess that every single metric that you could look at for stocks shows it at some type of all-time high or some sort of overstretched valuation. Without going into all that, I think the general public is trapped, right? It's trapped. And now they got to get out, right? They got to get out. They got to look at how much pain can I tolerate? Like Kospi was down 10% overnight, and I'm sure that's just pure liquidation. Pure liquidation. Pure, I've got to get out. Now, of course, Bitcoin and associated cryptocurrencies are already down, obviously. And there is news in crypto that could be of interest, that would be of interest on a normal day. Okay. So Franklin Templeton is setting up a pure crypto division. They manage $1 trillion. So smart money knows that there's trouble in fiat. I know that may not be today's trade or the trade right this second. There's XRP news overnight, where XRP gets a money transmission license across Europe, or at least that's how I would think of it. So the Clarity Act is also in its final weeks. Now, of course, if the Clarity Act fails during a NASDAQ debacle, that would be cause for what I would call risk management in crypto. Speaking of risk management in crypto, we got YouTube VIP show coming up after this, where we're going to be picking through the dumpster on small caps. And believe it or not, Toby has been really good with the small caps, or she calls them the baby caps. And we found a lot of the DEXs that benefited from all this stock trading on chain well in advance. Backpack, DEXE. Some of this trading that's going on in the crypto verse may either accelerate equities or potentially eventually wind up in crypto. But, you know, the thing I think that determines everything is going to be, again, SpaceX. Okay. Like if there's anything to do live TA on, it's this. So one thing that people don't realize is that, you know, broker dealers who absorb the stock and give SpaceX their money, you know, it's in their interest. It's in the interest of everybody who's still holding SpaceX inventory to not have SpaceX fall below the original IPO price, which I believe is like $150. Okay. So if you have SpaceX break down below $150, okay, or $135, excuse me, you are going to have people saying that the SpaceX IPO either failed or in a way was like a meme stock, or I don't want to say a scam, but you know, Wall Street pumped it and Wall Street dumped it. And if it goes below 135, that could be curtains for NASDAQ. Now, the good news is there will be a defense of 135, meaning dealers will be down there. Dealers will be down there, and I'm sure SpaceX will be too. You know, accumulating their own stock to try to push it, to try to keep it below 135. But if you're in crypto and you're looking for like what's the red alert levels, I would say there's two of them, right? The first red alert level is 135 in SpaceX. You know, the second level is going to be 700 in QQQ. That's the NASDAQ 100 ETF. And I'm just guessing that the $700 level is that important psychologically because there was a huge amount of FOMO that occurred on the way up. There was a dip and even more FOMO in semiconductor stocks, which are right here, right? In other words, the general public was FOMOing into this, into semiconductor stocks, like right up until yesterday. They just can't stop FOMOing in. And if you think about what's going on here, like the trade between like the hyperscalers, right, which are the guys spending indiscriminate amounts of money on AI, and the semiconductor stocks, which is what they're spending money on the chips, this divergence has gotten so absurd that it may have to correct itself, meaning semiconductors may have to turn around and go lower. And there was a report overnight, which is truly scary, okay, coming from Goldman, where, and I'm going to read this, the market's central premise has been that compute is scarce. If scarcity persists, prices should remain firm and justify all the spending. If supply of compute rises and rental prices drift lower, that is a direct challenge to the shortage narrative. The first place that pain shows up is in hardware, right? Some of these hardware indices have actually started rolling over, okay? So the bigger risk sits with further upstream in hardware and infrastructure stack, where expectations remain built around permanent or persistent scarcity. In other words, people may have bought too many chips and it may be cheaper than you think to use AI. So all this stuff that the general public has been FOMOing into is essentially wrong. And I would argue the stuff that they're FOMOing out of, which is Bitcoin and crypto, is also wrong. So they bought the wrong stuff at the top, and right now they're selling the wrong stuff at the bottom. They're selling the wrong stuff at the bottom because the Fed's going to have to help Japan. you're going to have wealth taxes in states like California. And the only way to protect yourself from monetary debasement is crypto. All right. So with that said, the thing that's working in favor of equities and crypto is that if this continues in stonks, they will absolutely not be able to do the Anthropic and OpenAI IPOs. They will never get that done because of how big those stocks are in this environment. In other words, if anything, SpaceX was so big, and I covered this in Patreon, SpaceX was so big that mutual funds had to buy SpaceX, but then they had to sell other tech stocks to make room for it in a portfolio that can only hold so many big stocks. Let's put it that way. That's an oversimplification, but that's kind of what it is. And that could be what's exacerbating NASDAQ this morning. So I'm trying not to get too hysterical about crypto, even though Bitcoin very clearly failed at the 21-day moving average. Yesterday's market update could have been a tweet. It could have been a tweet. I mean, there are reasons to think about, the monetary aspects of crypto, but they just continue to sell. That was obvious like 5 minutes. I even noted it on the stream. It's just like a big excuse to keep leaning on Bitcoin because, again, NASDAQ just is an accident going someplace to happen. All right. So another good tweet, another good idea, which is not about what the Fed's going to do, but what the Fed is doing. So you're seeing Bitcoin down today and stocks because the liquidity regime is tightening. We have a dynamic where we have fiscal tightening versus a deflationary AI backdrop. Which one wins? Right now, it's slowing global liquidity, something we have been talking about extensively. In other words, rates are too high. Rates are just too high, period. And all this talk about tightening, which I think is just insane. The talk of tightening alone is what's hurting Bitcoin. Now, of course, I think that's going to go radically in the other direction because of what's going on in Japan. They just cannot keep rates up here. And the more oil falls, the more slack Warsh is going to have, because if some guy on Twitter knows that financial conditions or rates are too high, so does Warsh. And he's just got to pay lip service to this whole rate hike thing because, I don't know, that's what the market is currently obsessed with. But, every night oil is lower because, as I just said yesterday, even though there was a little confusion as to my tone, the orange man just figures out that certain headlines get oil lower. So if he has to write checks or sound like he's writing checks to make things go away, he is going to continue to do that. Now, again, we've got the YouTube VIP membership show coming up after this at 10 a.m. Eastern. So we definitely want to stay tuned for that after we go through kind of the emergency NASDAQ stream this morning. So if we go to Bitcoin on the 4-hour chart for live TA, lo and behold, we've got another one of these expanding cone formations. Another one. And every time Bitcoin, if it breaks down out of the bottom, this is almost the too easy factor. Okay. If it breaks down and Bitcoin can't climb back above 63, well, then you have yourself a signal, right? And there's a couple ways to think about the signal. The first one is big cap cryptos continue to get hurt because it's what people own. You can say there are bag holders. You can say they're ETF investors. But to me, this stuff trades not that great because it just feels like every time there's a rally, people that own it get out. That's what it feels like. Because again, if you could have had the market update be a tweet with a failure at the 21-day moving average. So I don't want to be too positive today and too negative the day after, or too positive yesterday and too negative the day after. But it is very clear that, crypto is going to follow NASDAQ probably for the first 5 or 10%. I do think you're going to see SpaceX get defended, but we're still dealing with this thing where crypto gets sold along with NASDAQ, even though I think, frankly, that's just wrong because any positive news in crypto just is immaterial. Now, I know that there are a lot of people out there holding XRP. And again, you've got this pattern repeating itself where, XRP or, Lux Algo keeps drawing these triangles. And this one was a little ambiguous, but XRP comes to the apex and it goes a little bit sideways and then it just goes down, right? It's like breaking out of the triangle to the downside. It certainly isn't breaking out on the upside, to state the obvious. And I know you know this because if you have an XRP position, you're probably wondering, how in God's name can there be good news overnight and everybody just selling this? Well, of course, the answer to that is NASDAQ, right? Now, if we look at a 4-hour chart of some of these bigger stocks, right, or a 4-hour chart of semiconductor stocks, like I don't even know. I will tell you some good news in stocks. Normally, you don't have island tops, and I'll show you what that is in a minute. Normally, you don't have island tops in equities. So if there is like some measure of hope, this is the semiconductor index on an 89-minute chart. So trying to keep this in the TikTok window. You have a gap here up. So of course, general public FOMO can't get enough right there. And then you trap everybody with this huge gap down over here, leaving all these people on an island because you have these double gaps. Okay. Well, most of the time, this gap gets filled if there's going to be any more downside. Most of the time. Okay. That said, the FOMO that's occurred in some of these stocks is absolutely unbelievable. Like it is like, it's not the idea of AI that's the bubble. It's how the general public started acting that got scary very quickly. Okay. So here we have STRC. This is Michael Saylor's stock product, right, that pays the 11% dividend. And as you can see, it did very well yesterday, hits the equilibrium point, and then opens all the way down here and effectively has its little 1% baby crash. Meaning, this thing continues to go back down. You have, this is like a key indicator to watch. I mean, if you ever had more general public panicking in this, it's a measure of concern. If the general public is done panicking, because I mean, that's what's really the key here. Like, does the Asian stock index bounce overnight, or does this flood over into Japan, right? Or does it flood everywhere? That's going to be the key. Now, the thing that absolutely blows my mind, and it's probably because of this thing in Japan, is that they continue to buy the dollar. Like if you had to look at something, right? This is what's killing silver. This is what's killing gold. This is also hurting Bitcoin. It's the fact that they just continue to buy the dollar. Some of that is against the yen, but not all of it. Not all of it. And if you're looking for like some sort of like explanation as to like, what is actually going on here, that's one of the things that kind of matters. Okay, so if we're going to like a tactical chart of Bitcoin, okay, we're going to like an 89-minute chart for live TA. By the way, if you like live TA, don't forget to hit the like button, subscribe to the channel, and check out our VIP show where we're going to be looking for the next round of small cap coins. Do you know why? Because that's the only thing that's working. That's it. The only thing that's worked in this market in crypto has been what we call baby caps. Like we found all the DEXs, we found all these things on the show. And when we went through and you said, hey, which coins that we picked are working? Baby caps. Okay, so you got a short-term discount zone on a Bitcoin chart. And we're hoping that this is some kind of double bottom here at 62. Again, from a philosophical point of view, I have a really, really hard time going, oh yeah, let's get all negative. Let's get all negative on Bitcoin. I just can't do it. I mean, I understand it's going to fall NASDAQ. I get it. But then I see this kind of stuff. The digital euro takes a massive step forward after winning a crucial parliament vote. EU lawmakers backed a legal framework to launch a state-backed digital currency by 2029. Are sovereigns on your side? Sovereigns drove gasoline to $7 in California. Why? Right? The Europeans are turning their countries into like, I don't know, almost like 1980s communist countries. It's completely bizarre. Now, as we talk about that, we go back to the United States and discuss what exactly happens. And it doesn't have to be a NASDAQ mega crash, but it just has to be this realization that this whole trade has gone too far. I don't know what that means. Does that mean NASDAQ goes down 20%? Does that mean NASDAQ goes sideways and just kind of dies? I don't know. Okay. But I do know this. I do know they've gone too far. And they've gone too far to such a degree, right, that Oracle, right, is cutting another 21,000 jobs. I mean, this almost is starting to feel like Silicon Valley is going like full Twitter, meaning you wake up and, they're firing 90% of the company. Twitter survived. They're all going to do this. They're all going to panic. Right. I mean, that's the thing about, is it like NASDAQ isn't even down and Oracle's firing 21,000 people because Oracle is the poster child for we spent too much, we borrowed too much on this AI hyperscaling thing. And not to mention phony baloney accounting. So I had somebody on Twitter, like I was talking about how insane it is that people are buying NVIDIA and SpaceX bonds and not Bitcoin. And some guy who, it has a brain, thinks about it, goes, you know what? Bitcoin is stupid because Bitcoin doesn't generate revenue. You can say whatever you want about SpaceX or NVIDIA, but they generate money, whereas Bitcoin is just pure speculation. Okay, so Bitcoin is speculation, but it's also a monetary instrument, an alternative currency, which we've covered forever, which Toby will talk undoubtedly more about in our YouTube VIP show coming up after this. But, you have to think about what happens if this job thing spreads when NASDAQ either goes sideways or goes even lower. And what this guy said was, again, Bitcoin doesn't generate revenue. Revenue, and what is revenue, is determined by accountants. In other words, like with Oracle. If Oracle invests in OpenAI and gets a $250 billion ownership stake, so technically, Oracle receives $250 billion, say, worth of OpenAI stock, or even if it's 250 million, millions or billions in investment, okay, they give OpenAI money, and then OpenAI turns around and spends that on Oracle products. I mean, where's the revenue there? Is that revenue? Is that an actual sale, or is that somebody giving you your own money back? Do you know how much of this there is? Like, this goes on in SpaceX, right? Like, X does business with, XAI, which does business with Tesla, which does business with SpaceX. You have all this internal revenue going on. Like, again, why are these guys issuing bonds? Why do they need all this money? Well, we know why they need all this money, but why are they doing stocks? Why are they doing bonds? Why are they in such a hurry? Because I think a lot of their revenue could be phony. And that, ladies and gentlemen, is the biggest risk to NASDAQ. It's not a general public FOMO, and guys getting trapped at the top is a big deal. But God forbid, because this is what happened in 2001, right? You had a move in tech stocks, and then all of a sudden you had accounting scandals. You had Enron and WorldCom, and this was just like, this just blew people's mind. Enron was like one of the biggest companies ever, and it turned out the whole thing was like fake. Now, I don't know that you've got any Enrons out there, but, semiconductor stocks have got financial valuations that aren't even worth talking about, right? Here is the crypto version of Oracle, is that Ethereum just fires 20% of its staff, right? In other words, in crypto, you have what amounts to puking at a possible bottom. Ethereum did this, consensus, they did this in 2018. It feels, in crypto anyway, it feels like total despair. It's amazing. You have euphoria in equities. You have euphoria in equities and total despair in crypto. Now, back to the geopolitical front for just a second. The geopolitical situation, ironically, oil never went to 200. It never went to 200. And I guess one of the reasons is that they expected an American give up trade. Okay. In other words, the U.S. Petroleum Reserve, every president, this president, last president, every time gas prices go up, they release what is supposed to be our emergency, like wartime strategic petroleum reserve. And the U.S. was effectively out of oil in a matter of weeks, supposedly. So what does this mean? Well, it means that they have to do whatever they can to get the supply of oil up and the price down. And I've said this, like, this is the orange man's new game. I think oil going lower makes him more popular, even though everybody is writing the article that this is unbelievably embarrassing for the United States. Yeah, sure, militarily it is, but there are other geopolitical benefits, like, divorcing ourselves from certain influences, which we don't need to go into on a crypto live stream. but they are actively working to crush the price of oil. If you're trying to find a silver lining in all of this, because, again, okay, more scary information. Cathie Wood from ARK Investments is buying the SpaceX dip. Okay. Cathie is famous for buying a whole lot of vaporware stocks in 2021 that all went to zero after the tightening cycle in 2022. Okay. Despite the recent drop, SpaceX remains above 135, but I know she's a big Bitcoin person, but I would prefer, note how it's like Bitcoin's down 50%, but I don't want it. I want SpaceX down 15% in one day. Now, I'm sure SpaceX is going to work out just fine long-term, long-term. But there's too many people investing long-term and borrowing money against that. And they're also staring down the barrels of a lot of people in crypto who could use these tokenized stock market products to get leverage short and make this, I don't know, perhaps a little worse. Now, okay, so for all these problems that we list in stonks, they're all in TradFi, the defaults, the FOMO, the Korean stock market crash, the excess in SpaceX, meaning, it kind of became a meme stock, which is, I don't know. I don't know that that's SpaceX's fault, but that's just what the market did with it. These things are TradFi problems. Do they drag Bitcoin down on the first day? Yeah, sure. But what does this have to do with crypto as a monetary instrument? And to me, it's absolutely incredible to see, Ethereum Central, like first they were selling indiscriminately to Tom Lee, and now they're just laying people off. And it's like these things don't exist. They'll never come back and they'll never be used when the stablecoin trade, which is legal with the Genius Act, has not even been done yet. Now, on the flip side, it does scare me that Ethereum is panicking right as the Clarity Act. Like, do they know something? Like, that's what creeped me out as soon as I saw it. I was like, oh my God, these guys aren't going to wait to see what they do with the Clarity Act. They're panicking now. And I got to be honest with you. I mean, I know it's a crypto live stream, but like if you work for Oracle, right? And you're one of 21,000 people losing their job, where exactly do you go after that? Like, what tech company do you apply to? It's the same thing with Ethereum, right? Because I went through this in 2018, right? And we're going through it again in a bear market in a different way, right? Like, what exactly do you do? Well, what we do is we go into the teeny weeny small cap universe. And Toby's been saying for a long time, the action is in the baby caps. And it is. All the DEXs, all these tokenized asset plays went up 800%. Now, people are probably taking profits today. But like I said, your backpacks and all these different, RWA and tokenization plays exploded. And we're off looking for the next group of plays in this baby cap universe. And as discussed yesterday, anybody who thinks that AI is not coming to crypto is not paying attention. If you have a model, in case you haven't been tuning in, Anthropic has a model. Its latest, I would call it their computer science coding model, broke every single US government system in a matter of hours. And everyone is acting like that has like no implications. It's like deer in the headlights. Like, what do you think is going to happen when these AI agents or these monsters get loose in crypto? Like, who's going to be in control? Nobody, right? They're going to open up wallets. They're going to start DeFi protocols. They're going to issue meme coins. They're going to do all this stuff. Meanwhile, like I said, it's like complete cluelessness. And not to mention invest and trade in Bitcoin or use Ethereum. It's literally like no one thinks it can happen. Meanwhile, semiconductor stocks are the most overbought in history on the monthly chart, surpassing what would happen in the dot-com bubble. And as you can see, this has been moving. Like, this is the part that should worry you, right? The fact that this stuff just went vertical, it's got nowhere to go but up. It's easy money. It's amazing. Like, think about it. Semiconductor stocks, euphoric, up only, so easy. Bitcoin, impossible. Goes to the 21-day moving average, gets sold, right? Everybody is depressed. Any attempt to show positive light on, like, say, this thing in Japan or any other reason to buy Bitcoin, it's like I open my mouth, right, and eggs rain down from the ceiling, and I gotta get the egg off my face. It's become impossible. They just gave up at Ethereum. And I know this is going to sound insane, but that actually gives me some measure of hope that they have reached like this euphoric insanity and the hangover looms. And in crypto, where, I know the algos, we mindlessly follow what they do. But I just don't think that makes any long-term sense whatsoever, especially since, if you look at what's happened with RWA Perps, courtesy of my friend Andy, right? RWA monthly trading volumes are absolutely exploding. They're exploding, right? And Hyperliquid hasn't even gotten, I think, as big as it can, right? It looks like Binance has a big chunk. That's the yellow. But Hyperliquid, I think, can only get bigger when it comes to these RWA perps. So there is money on chain. There is money on chain. It's there. It's just chasing the wrong stuff. So it's like, oh, there's no money. No. That's why I got that chart. There's plenty of money. There's also a story from my friend Andy, which has a lot of details in it, but hedge funds are starting to express interest in other hedge funds, kind of like acquiring them. And these hedge funds do digital assets. They do digital assets. They bet and trade on Polymarket and Clashy, if I'm saying that right, which is, again, money in this speculative universe that can go to crypto or Bitcoin or smaller baby caps. Again, tuning in 40 minutes, this stream automatically gets directed to the next big sector play in small cap cryptos. Yeah, okay, it's hugely speculative, but so is what's going on. I mean, is there a difference between trying to find the next RWA, the next tokenization play, or the next AI play in small cap crypto and buying large cap semiconductor stocks at price earnings ratios of like 200? Like, I don't know. When I studied stonks, if the S&P got to like a price earnings ratio of 25, that was considered pricey. You have semiconductor stocks like ARM, MRVL, right? Some of these stocks have forward price earnings ratios of over 100. Like, that's not sustainable forever. Meanwhile, again, general public FOMOing into this and almost no interest in a monetary alternative. Like, how is there no interest, okay, in a monetary alternative? And this is really funny. So we'll see if this guy's right. Somebody opened a $34 million ETH long with 20x leverage. Liquidation price is $15.90. I guess we will take a look and check what happens in ETH at $15.90. somebody saw the ETH news and said, you know what? Let's get long. Or let's bet that whatever goes on in stonks only lasts one day. Because again, as I said at the start of the stream, you know, the 135 level in SpaceX is going to get defended, right? So Cathie Wood is thinking the same thing. Is that the best buy on the board? I don't think so. But, you know, she knows that Wall Street's down there and SpaceX and is not going to let it fall below the IPO price without some sort of huge, unbelievable event. John Legend says, ETH long, laugh out loud. God, whoever thought that we would actually be making fun of Ethereum at this stage in the world? Like in 2021, you said, where's ETH going to be in 2026? You know, your target would have been like 20,000 or some insane number. Where's ETH today? 1662 with the liquidation price at 1590, which is, you know, like I admire the courage, but you know, that isn't even like, if you just look at the lowest candlestick, like not the wicks, but the lowest candlestick body, it's at 1578. So this guy is betting that it can't even go down here, and the ETH low is 1500. So, you know, hey man, God bless if you want to try it. I just, you know, when you look at NASDAQ, you're either going to say, well, they'll defend SpaceX and it won't go down. Or you'll say it'll go down 10%. And if it goes down 10%, crypto will be caught in that vortex. But what comes back first? Many ways, because interest rates are too high. I wish they would kind of get this NASDAQ thing, whatever it is, out of the way. Just get it out of the way. Just, you know, let's wash everyone out and kind of start over. Because I think that's when crypto benefits, after they've washed it out. I think crypto lives with the fear of interest rates, the fear and the fear that that thing is a monster and becomes a mess. Crypto needs that burden lifted. Like, okay, we're done with that, or okay, it's not going to happen, in order for crypto to do at least somewhat better. Because like I said, the only big cap crypto that's doing well today on the board is Monero, right? Undoubtedly because of this insane news out of Europe about the digital euro. The digital euro. I mean, their money is their money and your money is their money. And, you know, I don't know that this is the best crypto out there anymore. It sure was cool when it came out, but it is worth keeping an eye. And we're going to be discussing this actively in our next stream. Like, this is DYDX, right? This is like a, I don't know. This was kind of like the first crypto kind of like decentralized derivatives exchange. You know, it's not the greatest thing in the world, but, you know, it is breaking out this morning because I think the volume that's going to be going through perps, right? The perpification of everything. So anyone involved in perps, there's a value proposition for, and frankly, we have been talking about this for a while. And then, you know, if everything gets perpified in equities, what happens when AI comes in? I mean, if an AI can break sophisticated spy systems, what is going to happen when they start trading in crypto? There is, okay, yeah, I've said that 4 times today. I said it 4 times yesterday. I can't come up with a rationale to give up on crypto because that's what's really happening. It's not that crypto is down. Okay, Bitcoin's down 2%. Okay, so what? Right? I mean, you know, Bitcoin would be swinging 10, 15% back when it used to act like Zcash. It's not a big deal. It isn't. It looks awful. It makes you feel bad, but it's not terrible. It isn't. But, if you have a perpified world and then machines trading in this perpified world, oh my God, the amount of volatility and the amount of upside that can come in crypto. I mean, what happens if like a machine herd all of a sudden decides to get 10x levered long XYZ coin? This is one of the things that we talk about, right? Is that, if you're long and you're depressed, here's what we tell people. We say that when you have crypto at these levels, regardless of whether it's higher or lower or where the bottom is, once machines get involved, you are not going to be able to buy crypto fast enough. Like, they're going to get to it before you do. You will never sleep. You will never get a good night's sleep again. You will be sitting in bed with your phone, trying not to miss the next machine trade when you wake up and the machine herd has moved a coin 25 or 30%. Or hedge funds that deploy machine herds, whatever. But don't tell me it's not coming. Don't tell me that, because it is. It is absolutely happening, because there are hedge funds chasing, like these niche machine hedge funds. They're not niche anymore, right? Jump Trading has bought a minority stake in multi-strategy hedge fund Nickel Digital Asset Management, according to people familiar with the matter, as stated on institutional Bloomberg. Thank you, Andy. Nickel, which specializes in digital asset trading, is also in talks with Chicago-based Jump Trading to explore other ways to work together, right? Proprietary trading firms such as Jump and Jane Street, which make money by buying and selling securities and derivatives, have evolved from niche algorithm-driven market makers into some of the most formidable institutions on Wall Street. Now, Jump is a significant player across asset classes, treasury futures, and crypto. The firm has also started trading event contracts from companies like Polymarket. So in other words, if you can use algos, which has got to involve AI, and you're in crypto, guess what? Legacy is out there gobbling up these companies. They're like, oh, wow, hey, you can do algorithms and stuff with perps and, and betting markets. This is happening. It's just not like, it's institutional Bloomberg, not front page news. And that goes for the situation in Japan, right? Kospi down 10% because, the retail bubble pops. Meanwhile, this thing with the dollar and what the Fed is going to have to do to stop it. The Fed has to stop that DXY at 101. You want to talk about, go back, I don't know, go back 6 months, a year, 2 years, and say, where would the dollar be in 2026, July? People would say, oh, at 80 or 93. Okay, it's currently at 101, making a new high for this move. Crazy. But I mean, that's a reflection of the shape the rest of the world is in. And you have to ask yourself, will the Fed tolerate this? And can you be looking at a dollar top? In other words, maybe silver down 4% is a buy. Maybe. I mean, silver is half of what it was when it was at the top. I mean, just getting absolutely hammered. And this is where, this is where the initial flush was. That said, I don't like these multiple X waves. This is not a good scene. Silver's got a lot of work to do before it recovers, but silver is at its discount zone. So that's kind of a wait and see thing. Okay. VIP, the next round of small caps. Small caps, micro caps is working in crypto. It has worked on trading, and we're going to be picking the next round in 30 minutes. So let me just take a moment to welcome who's here. We have Grandpa Keeter, a member. We have Bull Runner and Wing Raven. Welcome, gentlemen. Right. Loco for Crypto. Live It is here. Okay. MK Fu, Odd Dark, Gary the Holder, Cisco, right? Judge and Jury. Okay. Hopefully A1 is okay. Eric's, Sadia, Jacob, PWB. Good evening. Good morning. And John, of course, concludes with ETH long, laugh out loud. Feels like anything long, laugh out loud. But hopefully, one day that becomes a good thing. What I don't want people to do is lose heart in crypto because of stupidity in other markets. That's not what I want. Okay, ladies and gentlemen, that's the market update. We'll see you with Toby in 30 minutes.